Okay, think come on. Okay, you guys. It is 10 o'clock. So I'm not quite sure how long I'm gonna be here for. Hold on. There you go. That was me. Sorry about that. I feel like, yeah, I'm gonna be here as long as I can. I mean, there's a lot of information, but a lot of video today that I kind of want to show you guys about. Some of it related to Bitcoin, and some of it is related to GameStop, obviously. So, but today's show it's probably more Bitcoin, centric because I kind of wanted to address certain things. Now, don't claim to be an expert on anything, so please bear. Don't take my word for it. Do your own research, okay? But I think it's worth kind of talk about. So we'll see how many people join in, but give me 1 second. I will be right back. All right, I am back. Okay, so hi, what's up, guys? Kais, I hope I say your name right. Welcome to the show. Hope you have a good morning today. Let's see. So let's first things first. The price action was not much, as I said. But again, volume was low. Nothing much to be alarmist about. But I think again, anytime there's low volume, but the price action, kind of falling down, it's just indicative of whether people are paying attention of this stock or not. It's just appearing that way, that nobody is paying attention to this stock. So in which case, if it's true, then it's the best opportunity to add more, in my opinion. Obviously, don't do any crazy thing. Just because I said it's the best time to buy doesn't mean that it's not going to come down in price. So it could happen in that sense. I mean, I'm always waiting for $20 share. And so if that's the case also too, right? Very expectant of that. Okay, 1 second here. Let me switch back to this chart right here because I know you guys probably see this a million times, the chart and all that stuff, and but I think it's important to kind of showcase it. One of the things that I always want to kind of caution people is that even though I am very bullish in this company, I also understand that it's very frustrating for most people who don't understand what this company is trying to achieve, right? On the fundamental level, okay? Because again, the media has been telling people time and time again since, the dawn of day, okay, that this company is shit. This company doesn't do much. And so when you say stuff like that many times, you begin to believe it, even though you just know nothing about this company whatsoever. You could still believe it, right? Because you've heard it so many times. And so that's the problem that GME has. Not so much that we're not good companies, and the change in which company has been transforming into has been more okay. I'm gonna be accused of being so optimistic about this, but it's unbelievable, the growth and the amount of growth is about to come. I cannot describe it, But the problem is that it might take so much time, for people to realize it. But because they don't understand, the incremental change, the small little incremental change could add up to so many seismic, cosmetic. I don't know. I'm trying to use big words here to try to, get you to realize how good this company could be. In the future, obviously anything could happen, right? But my point is that, you have a leadership that is so dedicated to build something, okay, because of the passion that they have. And so when you have people like that as a leadership, you don't ignore it. Yeah. And in a company, especially publicly traded or otherwise, it's hard to find. Okay. Now, this type of CEO, I'm talking about Ryan Cohen. Okay. It's only prevalent in the private sector. So it seems, right? Because by the time, the companies get into public sector, you don't see CEO fighting as much for shareholder, even though they claim to. Okay. And so again, I see a stark difference between Ryan Cohen and any other CEO out there that are operating in the publicly traded company. Now, the other person that come close is Elon Musk, in my opinion, right? Now, of course, these are two different people, obviously, and they fight for different things. But to me, these people are passionate about what it is they think needs to be changed, right? Whether you like it or not, and the media would like to tell you that Ryan Cohen is somehow quiet and all that stuff. They're not part of the group. He's not doing this. He's not doing that. But in the meantime, never tells you the result of what this company has been doing. Now, they do that on purpose, in my opinion, right? Because based on my observation, it seems like the companies that they want you to buy, no matter what that company is doing, whether it's severely overpriced, they still want you to buy into it, right? And not very honest with their audience. Like Palantir, for example, Jim Cramer want people to keep buying. Buy Palantir rather than GME a couple of weeks ago. So stuff like that, right? When you hear, or when I hear anyway, those type of media describing this company as something that is not going to amount to anything, I question that. And because again, I've been following this company for quite some time. So, as you know. And so that type of rhetoric is so hard to shake, you guys. Even the people that have this company don't completely have this company, hold the share of this company, don't completely understand it. And they get so frustrated. I'm telling you, when I talk to people who own this stock, unless I hold their hands, and every time I say, look, the price is down right now, but this is the best time to buy. Well, whatever reason. But I could sense a feeling of urgency to have it, price spike like this, right? Oh, when is that the next one? It's like that urgency is always there. Hey Carter, what's up? Thank you so much for joining. But anyway, so these type of thing, obviously, I've been training myself of quite well, and because like again, I understand the game that is being played right now, and unless you're willing to play the long game, you're not going to win in this at all. Because, like I said, as a trader, you are not trading against other human. You are trading against algorithm. Okay. Again, unless you are a genius like Roaring Kitty, betting up and down. Yes, I do it myself. I get it. But just realize this one thing, okay? That if you're consistent, if you're convicted, if you understand what you hold, doesn't matter what you hold. If it's GameStop, if it's Bitcoin, if it's whatever, XRP, if it's Cardano, whatever. Okay, I just name 3 coins that I own, so very biased. Okay, so please don't make any choices based on that. But my point is like do your own research, know what you hold, understand it, and then be unapologetic about it. Right now, your job is to know what you hold and that it is true, not influencing by anyone. Just because I mentioned this company, GME, doesn't mean that it's a good thing. So, you know what I'm saying? And if you buy into this company and it come crashing down to $18, right? The next day, does that mean the company is like now all gone? It's like, yeah, the value at that time, because of people, right? People are emotional, okay? An algorithm will do that, will take advantage of that. So understand that. And then you're going to be so happy that, okay, I bought at 20, now it's at 18. Hopefully you have more money to add more. And if not, just wait. Because again, you probably just too early into the play. But my point is that, if you think that $24 is a good price, then if it comes down to 20, then it's a much better price, right? You get it at a discount for sure, and then you get more equity into the company future earnings. So that's how you have to think about it, just like anything else. But anyway, so let me get off of the preaching soapbox over here. Just know that the price may come down too. Okay. Now this level I've been kind of looked at quite a bit. So I thought 25 was the one right here, but it seems like because of the turmoil that appearing, they're trying to say that Trump tariff is the one that causes it, but who knows? Perhaps this is just his way of running things. So understand where the man is. Okay, I'm talking about Trump here, and positioning yourself accordingly. Okay, and the reason why I'm so convicted in this company, you guys, is because of the cash. And anyone who in this particular environment of layoffs, okay, of bankruptcy, retail apocalypse still looming, okay. Target has been downgraded by the CEO. No, have the guidance of lower, because of high price tariffs and all that stuff. They know that they're not going to be able to make as much money next year or next few years. So understand that. Perhaps that's what the market scares is all about, or they're trying to scare you out of your position. So with that stuff in mind, GME has been doing the right thing, right? They have cash to survive the downturn. Not only that, they have the ability to do anything else, okay? And they're not selling. They're not selling out their shareholder in order to get more money to leverage themselves to the tilt, okay? Now is not the time. There will be the time soon, right? Maybe a couple years when things are turning back up again, okay? So just be patient. I mean, this could drag out another 3 years. Do you have the time, the guts, the conviction to not only stay, but accumulate more? So, yeah, it's a no-brainer to me, in my opinion, right? So again, the longer it stay like this, the more shares I'm gonna accumulate anyway. So, in the long run, I'm gonna be fine. I know that to be the fact. Okay, so the turmoil obviously is gonna cause some turbulence. So expecting that. What I'm expecting here is the people will be scared out of their position. What I'm gonna, okay, hold on. Let me try to do a Fibonacci over here. Forgive me, I'm not a technical analysis person, okay? So understand that. So the Fib over here, it's kind of retracing back to the last leg here. Obviously, we need to hold that. If not, we're gonna come down here, right here. So $20, obviously, that's another level. It becomes likely now, it seems. But again, like, make your own choices if you want. Currently, I still have my April call. I add June call, some of it. Okay, only 2 for now. Hopefully, I've been trim in and out of the call option that I have been placing. Again, anytime I see a little tick, obviously, I'm like, okay, let me take the 10% off of the table. I mean, my risk management is terrible, you guys. So it's okay if it's down. If it's down, I hope that I have more money to add. But typically, my option trading is still. I mean, I still have some money in there. So it hasn't been moving as much as I wanted to. But I haven't blown off that account. Yet. So knock on wood, right? But like I said, again, it's only a small portion of my portfolio, so just enough to get me interested. Hey, because I can. What's up? Now it's the time. It's 12? Okay. 12 o'clock? It's a time to do what? I have no emotion. I know. I don't think we all do. Einstein. I don't know. Again, like it's more to do with us being so hardened about this position and convicted, and of course, knowing what we know. It's hard to shake anyone from this position. But again, that could be also overblown as well. Who knows if they still have short position or not? But I was looking at this right here too. The official number obviously has been coming down. It used to be 8%. Now it's down to close to 6%. Hold on, let me see the shorted interest, okay? And this is, again, I don't know how they are able to buy and sell. Perhaps, those spike that you see every single day in Robinhood, a couple share here and there, are being kind of skim off of like that, where they could, cover it slowly without causing the price to be known. And again, this is predatory, to say the least. Very predatory, and I don't know how they are able to continue to do that thing. But again, they're doing it for self-preservation, okay? They want to survive one day more. You have to study Ken Griffin if you want to kind of win the game. But of course, these people are professional and they have the connection to be able to do what they're doing. Even though it's not ethical to do, they are allowed to do it. And the current structure that we have right now, even though we have laws that you shouldn't be doing this and shouldn't be doing that, nobody actually enforced it. So if you have laws and you don't enforce it, what happened? You have a dystopia, right? And people would just, give in a leeway, cutting some slack, and then when they it's hard to reel them back in because they're getting so used to do whatever they do to survive at all costs, even though, it costs their clients, their constituent, their, the people that are getting scammed. They don't care. They don't care. They never play fair, in my opinion, in the stock market. So you have to be smarter than that by not playing the game, right? I know I'm playing the game myself. Do what I say, do not do what I do. Okay? So that's a good rule of thumbs. But anyway, so just position yourself to where you could hold out for a long extended period of time, because you never know when they're going to give up on this. Okay? Because again, to maintain this type of position, if it's true that there's more shares out there than it exists in the company, then they have to maintain it somehow, some way, swap or whatever, right? And it's becoming burdensome eventually. The problem is, retail has to hold on. And how many of us will be able to do that? Imagine if it happens 10 more years, right? So that's the things that I'm thinking about, how long can they draw this out? And it may happen. So, again, I'm giving myself at least 10 years for my long-term back, for my moon back. So I have, let's see, close to 6 years still on the table. So, yeah, we'll see how it goes. But I'm always like prepared for the worst, hope for the best type of situation here. So, but anyway, so look at this. Short position is still high at this moment in time, but it used to be a lot higher, right? So this is probably the reason that they're gonna keep pointing out. Oh, it's never gonna happen. It's never gonna happen. These are just self-reported, you guys, and perhaps they were changing the way that they report the short interest too. So, I'm willing to say that there's still 6% of the float is still short, and even that is still a lot. Okay, I mean, look at the volume that we've been trading, you guys. Look at this. It's not that much, like 2 million shares. Nothing. Dry, right? And I love this type of environment because, again, you have the ability to add more if you have the money to, right? So, and it's prime for option buyer to jump in too, because IV is kind of like relatively low. Yes, it kind of ticked up a little bit, but it's still relatively low. And so, I mean, for this company anyway, compared to other company, the IV is high for most company. Somewhere around 100 or even 80. 60 is like the lowest GME has ever hit. But yeah, so with that shortage of shares, people are diamond handing, right? And again, it's evident based on how many volume are out there. And so if you look at the price chart, you could see volume is dried up. So when volume dried up at a downtrend, what do you see there? Downtrend, but the volume dry up too. So there might be a reversal happened when volume come back. So again, my logic, right? Keep it simple type thing. Okay. Let's see. Yeah, there's still availability of shorted share. Yeah, the amount of shares being lent out, by whoever. It seems like there are a lot of shares available to be lent out. So I don't know. Option. Hold on 1 second. Give me 1 second. I'm trying to look at the option. Anyway. All right, so let's see what is going on the option chain. It's been dry as well. It hasn't been, any movement at all. And of course, like, hundreds of hundreds of, hundreds, thousands of contract is being bet every single week. Okay. And these are out of the money almost every time. Okay. So, again, that's why option is it's so risky. Okay, so for last week, the 7th, if you look at it right there you go. Max pain is there, right? Again, that's why it closed below max pain or around max pain almost every time. Okay, so that's one right there. And then for next week, max pain is 25. This thing could change in a dime. So I think I have April 17 call. Max pain is 24. So again, it could change anytime. But I thought April 4th, this is the one that, yeah, max pain is a little bit higher. It used to be $30 a share a couple weeks ago when I looked at it. But yeah, right now it's coming down. So again, depends on how many people are actually betting up and down, right? Institution could do this at a blink of an eye too. Oftentimes when institution wants to buy a large amount of shares, they tend to bring the price down and, trash it everywhere, releasing their psychological bot, to try to torment you. It's like, ha ha ha, right? Taunting. It's like, look, it's down it's down $10 a share. Ha ha ha, right? You should have sold and all that stuff. Again, to try to shake you out of your position. So don't let them, right? Okay? Just know the game being played on your mind. Understand that. Okay, and then I bought one of these two. So somewhere. I bought the 30. Yep. So got two of those. Let's see. But not much there. Of course, 30 has more bets right there. Yeah. So I'm sure, as time goes on, depends on the earnings report. I really think that we're gonna beat it pretty much. Not sure about the top line revenue. Obviously, that's kind of a big steep. Let me see. Last time, no, 1 billion. What was the last time? We were doing $1.7 billion back then. Now we only need 1.4 billion. Of course, we've been closing a lot of stores, so that might be, a steep hill to climb. But I have no doubt that we're gonna do a lot better in the price to earnings. Price to earning? No, sorry. Earning per shares. That's what I was talking about. Because again, look at this, 8 cents per share. That's crazy. We beat that last quarter and we were doing much better today. So I have no doubts. Yeah. And we've been selling Pokemon like crazy. People are lining up. Like my thumbnail in kind of depict. So, and yeah, people were pre-ordering and getting mad by not, getting their pre-order. Like the video I showed yesterday. Anyhow, so that's just, GameStop part. I like to switch gear a little bit here. It might, it's still along the line of GameStop, but I saw this particular video. Now, some of it is kind of off, okay, in my opinion. But I'll point that out when I hear it. So let's hear it together. Okay, turn off my microphone.
Right. I mean, it's that meme
That's
stock.
bad. Yeah.
But they've been quietly reinventing themselves, streamlining operations and cutting costs.
Mm-hmm.
But here's the thing that really caught my eye. They're going all in on Bitcoin.
Yeah, it's big.
And today, we're diving deep to figure out if this is like a brilliant move or a total gamble.
Absolutely.
So we've got this article here.
So I'm not quite sure when they're saying they're going all in. Of course, we don't know that. And, this is a bit speculative, okay? Until we see it on paper, I'm not going to believe that, okay? Because I can. Short seller lost $73 billion amid market rally to start. Okay, so, interesting. Perhaps, GameStop money? Of course, who knows? Where are they losing to, though? We don't see any price appreciation or anything like that. So that could be a psyop as well, right? To make us think that, we're winning or whatever. But in actuality, they might still have control. Okay. So again, just thinking it out loud.
Here called GameStop's Big Bet on Bitcoin. A new era for the meme stock giant.
Right.
And we're going to use that to kind of guide us.
Yeah.
See what they're doing.
So it's a very interesting situation for them
Okay.
because their new investment policy, specifically allows them to explore different kinds of assets.
Okay.
And obviously Bitcoin is the star of the show. And this isn't like those NFTs and crypto wallets they were messing with before.
Right.
This is a complete shift in their strategy.
It feels like they're going all in.
Totally.
And it's kind of crazy because they had to stop those other projects, because of regulations and stuff.
Of course, yeah.
But now they're sitting on a ton of cash.
Mm-hmm.
I mean, a ridiculous amount. It's like $4.6 billion as of late last year.
Wow. That is significant.
What could they even do with that much in the Bitcoin market?
Well, actually, they've already been buying Bitcoin.
Really?
Yeah, for a few years.
A few years? I mean, these people, right? Are we missing something? Like, why do these people sound so confident, that we're buying Bitcoin, right? So that's what the red flag was for me watching this video. Obviously, they're trying to entice, Bitcoin. Look, I'm into that camp as well. But I know enough about this company that they have not made that a decision yet. But this particular podcast, I don't even know who these people are, honestly. So I apologize. But it seems like a podcast that people would listen to. Of course, this channel here, probably be posting it, but only have 19 subscribers. So a very small channel. So I'm not quite sure where this segment coming from. But just that alone, that piece of information stating that we've been buying Bitcoin for a few years is misleading for sure. Now, what is the intent of this video? I have no idea, or this podcast. Only to perhaps, trying to pin GameStop price based on the cycle of Bitcoin. And perhaps this is the way for them to blame the run, okay, on the enthusiastic speculation that they are buying into Bitcoin. And so when Bitcoin rally this time, obviously I'm expecting the rally on Bitcoin as well. That's going to be the excuse for the media to say, oh, these people are just enthusiastic about Bitcoin. Has nothing to do with short covering, okay? That's the cover story that they don't want you to hear about. That's the truth because they're trying to cover it. Just speculation, obviously, on my part. I don't have any evidence, just observation and, instinct when I hear all this type of stuff. And it could be the actuality that, yes, Bitcoin, that GameStop is planning to buy it, for sure, or learning as much as we can, with Ryan Cohen being as thorough as he needs to be in order to position themselves or GameStop into that tech, Like I said, the NFT and all that stuff, we are already a foot in that world. So it's not far-fetched to be like, okay, our CEO is going to be learning as much as he can about the industry at large in order to position our company to be a better one in the future. Because blockchain is the future. Internet of value and all that stuff. Again, that narrative is going to continue for decades on end from now, right? So you might be still early, very early, because not many people realize the technology yet, okay? So understand that. Be more. What is your favorite color and geographic environment? What is this geographical environment? Not quite sure what geography environment. Okay, so you mean like weather-wise, right? Climax. I want to make another NFT based on Loopring. Okay, cool. Good question. Favorite color, I like red. I like white. And I like blue. No, I'm kidding. No, but seriously though, I like red. Green. But more like red. Maybe just psychologically, like I'm like, okay, every time the candle goes red, I'm like happy type thing. So, but yeah, I have my cell phone case is red and all that stuff. So, neutral color. Now though, I feel like when I was younger, red was a thing, but then I'm like, every color is beautiful in its own right. So I become more neutral in that, right? So, geographical environment, I would say hot weather. I hate cold. Cold places, I don't know how people could survive, honestly. So I was born in a tropical, place. Mid of equator, so I'm okay. Ocean, yeah. I like the beach, ocean, but yeah, not much of an outdoorsy person. So I like to be indoor. Stay away from the elements. But yeah, sometimes it's refreshing to go out. Once in a blue moon, I would recharge myself, kind of walk around. But not much. A big fan of hiking. Although I know it's healthy for you to go out there and get some fresh air. I always mentally do that, but physically I'm just way too nah. a bit sedentary. So I need to be a lot better at that though. But yeah, thank you for asking. Do you do NFT as well? I didn't know you have that knack for that. I have NFT. I was trying to do it on Loopring, but again, like I like to draw, so but I kind of stopped doing that. I need to pick up on that. I used to paint and all that stuff too, so pretty relaxing. Okay. But yeah. No, thank you. Okay. It sounds like an AI conversation to me. Oh, okay. Like text to speech or something. Oh, that could be. Okay. Now that I thought it was like a real thing. Okay, well, let's listen to a little bit more.
Okay.
But this pile of cash, it's a game changer.
Yeah.
To give you some context, their operating expenses last year were only like 1.5 billion.
So they've got a lot to play with.
They do. They've got a lot of firepower for this Bitcoin thing.
Okay, so that's interesting.
Mm-hmm.
And there's this whole thing with Ryan Cohen and Michael Saylor.
Yeah.
Did you see that?
I did.
For anyone who doesn't know, Saylor is the chairman of MicroStrategy.
Right.
and they are swimming in Bitcoin.
He's like Bitcoin royalty.
He is. So what is Ryan Cohen doing meeting with this guy?
Well, MicroStrategy went from a software company to basically a Bitcoin holding company.
Oh, wow.
With Saylor running the show.
So is Cohen, like, taking notes?
Maybe.
Are they going to partner up or something?
Who knows? But it's definitely gotten people talking.
Yeah, that's for sure. And whenever there's all this talk,
Yeah.
the stock market reacts. And GameStop stock, or GME, as all the meme stock people call it,
Right.
it jumped up over 18% after hours when that meeting went public.
Wow.
It's been super volatile.
See, of course, all of us know that didn't happen, right? Because that picture was posed way before, a couple of days before, that aftermarket spike. So it wasn't because of that news. It's just that it's timed it perfectly so that they probably want to cover some amount of shares at that particular time after markets, though. And again, this is where the predatory, unethical things that these people have been doing to the markets. This is what I'm frustrating about. But again, that has nothing to do with the fundamental of the company whatsoever, right? Whatever the price is doing right now, whatever you're trading, it's not in accordance to the supply and demand, because they could, take the supply out of the market so that they could settle it in some other chain, secondary market or whatever that they have access to. And these are big institutions, you guys, And again, that's why they do their own dealing. They have swaps of some sort that they just bet among each other, right? That doesn't affect the price whatsoever. And so if you have another entity that have the ability to affect the price, obviously you're going to have the upper hand. As retail, though, we get kind of slushing around, tossing around like a crazy person. But again, that doesn't mean that you can't, benefit from it. Obviously, you have to position yourself and train yourself to at least recognize those type of thing. And then, okay, that they're manipulating it up and down at will. And so if you could add a certain edge to you where you understand the company from within and understand where the company is going, then you position yourself like, okay, every time the price comes down, you buy more, because in the goodness, lost my train of thoughts. Sorry, my brain is dead. No, just kidding. The company itself is doing well, balance sheet wise and all that stuff. But the price is what caused that emotional, why is it not up yet? It's been 10 years, my life over here. But anyway, again, people exaggerate, right? And these institutions, they know that. They know that you are so emotional about your investment. And so that's why they touch. Like Einstein was saying, have no emotion. It's okay. The ebbs and flow is what it is. That people are just emotional. But eventually it's going to become so obvious to people, to institution, to everyone, that GME is the only company that is at least setting up to do something better in the next 10 years. Okay. In a better position than any other retail out there. Okay. Even Amazon, I'm telling you. Yes, even Amazon. Yes. Amazon has more money. Yes, I get it. But they don't have the ability to grow as fast as GME right now. So we are in a growth stage. It's just slowly inching to that. Yes, because we have a strong foundation, or we need to build a strong foundation. We've been doing that for 3 years, you guys. When I said we, it's Ryan Cohen and leadership. Okay. I have no part in it. But I love, following that type of stuff. So, and again, this is what makes me stay so convicted about this company. So, okay. So that's a level that you guys have to go on, that so that you're not bogged down.
Since they announced their new investment policy.
That makes sense.
I mean, volatility is the name of the game here, right?
It is. Bitcoin has huge potential upside,
Yeah.
but it's also incredibly risky.
Mm-hmm.
It's like investing in a high-growth startup. You could strike it rich.
See, that's another thing. Say, it's incredibly risky. What is so risky about this company? They have cash. They could survive. They don't burn any cash. What's the risk? The risk is you not being in it. Okay, so again, but again, this segment is so misleading. First, they're telling us that GME has been buying Bitcoin 3 years. It's like, goodness, people. But hold on, let me see how many views. Okay, only 200 views. That's not too bad. But can you imagine that?
Or lose everything.
Exactly.
So is GameStop making a calculated risk here, or are they playing with fire?
Good question.
Could they really pull a MicroStrategy and completely change who they are?
Well, there are definitely some challenges. First, can they actually replicate what MicroStrategy did?
Right.
The market is different now.
Yeah.
And there's no guarantee that Bitcoin will keep going up. And second, their main customer base is gamers. Right.
Yeah.
It's the best fit for this type of demographics. You realize that Bitcoiners used to be originally gamers who trade among themselves? Go back to the history of Bitcoin, okay? Gamers are the one that makes waves, okay? That was the first group of people that trade Bitcoin among themselves. For skins, for whatever, Brock Sphere, the Tether guy, who used to run for president too. If you know who I'm talking about, I'll find him somewhere. Maybe today, I don't know. But anyway, that guy has been explaining, he was the early Bitcoiner, and he was the one who, kind of saw this as an opportunity early on. And he explained, that used to be the gamer part, and he was the one that kind of make it a little bit more mainstream back then. But the point is that, yes, this is the best fit. What do you mean it's not the best fit? It's the same demography with a different, fan base type thing. Now, I know people have been telling you, especially the media out there, that, it could be cultish. People are so tribal. And again, that could be demonstrated on every Reddit, I don't know, on X, communications, and people are getting ups and arms about Bitcoin only, XRP only, right? Again, they have their own thing there. So there's a lot of passion, built on the Bitcoin, people, Bitcoiner, and then XRPer, right? And so whatever they're passionate about, of course they're gonna let you know. But to say that, this is not along the line of what GME sole purpose is, which is, to cater to gamers, it's not true.
Will they be into this whole crypto thing, or will it turn them off?
That's a good point.
It's a big shift for them.
I mean, they're really moving away from what they know.
Yeah.
And taking a big bet on something completely different.
So is this a smart move to save a struggling company?
Right.
Or have they gone too far?
See that? Like, struggling company was struggling. Can you imagine that? We're struggling with $4 billion cash. Okay? We're drowning in our cash right now. Oh, the way that they put it just makes me laugh sometimes. I'm like, okay, all right, if that's a narrative you want people to believe in, good on you. Appreciate the feedback. Because I can. Okay, so you cool. Oh, I did not know that. See, I'm not quite sure I know this person, but cool. At least you have some knowledge on that. So that's cool. I'm sure you're more of an expert than me. I did mint NFT on Loopring just to try it out, and I did some. I might show in a few, but we'll see if I have the courage to show my artwork one of these days. Okay, excuse me. Give me 1 second. Before that, though, let me. Okay, so along the line of
of U.S.
Bitcoin,
moves for
this is a interview. Jeff Booth. He had a good point there. Of course, it's been a lot of conversation around Bitcoin and what it's going to be, the future of it. And so this one is about Trump's strategy on the reserve and all that stuff. And again, these things are monumental shift, you guys. Like, people are trying to poo-poo it for some reason. That was nothing yesterday. It was just a nothing burger. And no wonder, people, again, this is oh my goodness, people. Look at the price of crypto right now. Okay, these are the trickery that is happening, where they poo-poo something that is so monumental that cause people to be like, oh, you're right? Trying to get people to agree that Bitcoin is not going to do anything. It's not going to go higher. Is it going to go higher? It's like, based on the math. I mean, I showed the stock to flow. Go study it. It's okay if you don't understand it, but please at least study it. Now you're setting yourself in a better path 4 years from now too, right? Again, it happens every 4 years. I don't know why, but it happens every 4 years. You know what? Because the halvening effect. Less Bitcoin will be created as time goes on. Okay? So that's why. At least study it, and study what inflation does to your ability to buy things. Okay? Study the Federal Reserve. That's going to give you at least a reason as to why the price is so stupidly high. Okay? And again, it's so stupidly high because you used to see just about 20 years ago, Bitcoin was less than a dollar, right? It's crazy to think, right? Not even less than a dollar. I mean, you see the price chart, it's going crazy. But the point is, like, the adoption, the speed of adoption has been pretty substantial, okay? And so the rate of adoption as well. And now you have city-state that are competing for the short, low amount of Bitcoin. So that's going to do something. I don't see myself as an expert. I just wing it, okay? I mean, it's pretty easy, right? Just follow just how to upload NFT on Loopring. Like, people make tutorial video on that. So, I mean, the scary part is the knowing how to access the wallet when you lose your phone, because they are encrypting based on your cell phone. So the key issue, is going to be on how are you going to keep your keys safe from other people and have the access to your bank account, right? Bank account, quote unquote, because that's the whole idea of Bitcoin and decentralized finance, is to get rid of the counterparty risk. Okay. So again, it's a deeper concept for sure. When it comes to, like, borrowing and all that stuff. And that's the reason why we have the mess that we have right now, with our share, GME shares being borrowed on top of the borrowed. And not only that, you have so many naked, position, swap position, overseas account, of GameStop, oversee trading however many time over, right? And so how many shares are being created that way, right? So anyway, so let me put this on, and I'm gonna take a sip of water.
If U.S. moves forward with a Bitcoin reserve, other countries will too. Whether they do or not, other countries will. Mm-hmm. And it's going to kick off a cycle where some people are selling right now and everybody's going to be buying. If people are holding in self-custody, where does the Bitcoin come from? And there's a whole bunch of Bitcoiners that aren't going to sell at any price. If you're trying to, just imagine you're a financial institution and you've always been able to short long and short a system and get bailed out. What about when you try to short something, you can't buy it back in at a price? Like, what does this do to some of the institutions that might naked short this?
What if the financial strategy you've relied on for decades is suddenly your biggest liability? What if shorting Bitcoin, a tactic Wall Street has mastered in traditional markets, becomes the very move that dismantles your wealth? According to Jeff Booth, that's not just a hypothetical scenario. It's a financial ticking time bomb. In an era where Bitcoin is poised to redefine global monetary policy, shorting it could be the riskiest bet you'll ever make. Booth explains why this revolutionary digital asset is impervious to the usual tools of financial manipulation. Bitcoin's fixed, finite supply ensures that demand will always outpace availability, especially as the world begins to adopt it as a reserve asset. Here's the kicker. Bitcoin holders are playing a completely different game. Unlike other markets where liquidity can be artificially manufactured, Bitcoin's true believers aren't selling at any price. This creates a liquidity vacuum, a nightmare for short sellers who are suddenly unable to cover their positions. As Booth bluntly puts it, if you short Bitcoin, you might find yourself unable to buy it back at any price. Jeff Booth's warning is clear and unflinching. Shorting Bitcoin isn't just a bad move. It's a losing strategy that could devastate your portfolio and force a complete rethinking of institutional financial practices. In a world where Bitcoin is rapidly becoming the foundation of a new financial system, betting against it isn't just unwise, it's financial suicide. Let's watch clips from Jeff Booth's interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
We've lived in an extractive monetary system forever. There has never been a system like Bitcoin before. So all of our ideas are coming from that system. And so it would be normal from that system to measure number go up. But just and think through this at a first principles level. If you are saying number go up, you are actually part of the centralizing system. The natural state of the free market is deflation. We've always a credit-based system cannot allow
$823 overnight?
Crazy.
Discover.
Sorry, you guys. This point is very important, you guys. So when he said like extraction, I'm thinking about inflation. Okay, that's the same thing. There's no reason why there has to be 2% inflation every year. No reason whatsoever. Okay, the only reason is to steal more money from you, from the rest of the world. And they do this, whether it's government, whether it's Federal Reserve, to again maintain their dominance on all of us, right? When we are the one who go to work, pay taxes. Not only that, we have to pay taxes through inflation because of these people, right? And again, Bitcoin is what it is just code that says you cannot do this, okay? Meaning that, okay, if you want to have that system, then we'll have the system where it's not going to be extractive. It's going to be scarce. And so the more people join in to the network, which has been, for 20 years already. And so this is a 20 years worth of network building of, having a lot of speculators too. It's not just people who believe in the fundamental of Bitcoin. Of course, it's fun to see your portfolio going up in price, But if you understand the fundamental of what Bitcoin is, I wish I know what I know now. 4 years ago, 6 years ago, 7 years ago, before I sold my Bitcoin. You see what I mean? So that's the idea is that I could never accumulate 2 Bitcoin. I used to close to 2 Bitcoin back then, okay? Right now I cannot do that. And so that's the value proposition that's why he's saying, if you're shorting this nakedly, like the traditional financial system, then you may not be able to buy it back as fast as the price move. So I don't understand why people don't realize the potential of what it is. And let me go to this as well, because that's a bit, I'm gonna come back to this video real quick, but give me 1 second here. I'm gonna go back to this right here, because it's a good segue to go into before I play it back. Okay, so this is the one. So, of course, this is Morancho's. I'm just doing a clipboard here, you guys. So I want to show you this particular one. Now, I respect the man, obviously. I agree with him on GameStop, obviously, but I think he's wrong about Bitcoin. Now, this particular breakdown, he was saying that institution own Bitcoins already, which is not completely, well, I disagree on that because of what he's showing here, right? Look at here. Let me see. So this is what I interpret it to be. And again, I respect the man on every level, okay? But I have to disagree with this one because look at this, okay? The total approximately this many 400. Okay, sorry. Let me try to blow it up so people could understand what I'm trying to say here. 460 million wallet out there. And again, this could be like, original people who they call it a burn wallet, right? They don't even know that, $1, okay? 10% of this wallet right here that is inexistent are $1 or less, right? Over $1. So I would say $1 or less, okay? And then you have like over $100. It's like less and less, right? But the people that has the most is over here. $10 million or more only makes up 1%. Okay, so that's close to 10,000 shares. 10,000 wallet out there. About, right? That has $10 million. Yeah, so those type of wallet will be shown on here too. The same way I have let me see, 5 Bitcoin wallet when I first kind of try to learn about it and never use it. Never put anything onto that wallet. You could just create it and then just never touch it, right? And again, those wallets are there. But I guess if you could go and look into the, But he was saying that 90% of people own Bitcoin when the graph is showing otherwise. So again, that's what I'm seeing here based on the graph, because less than 1%, and this is not even 1%. Think about this, okay? This is 0.01% own $10 million or more. Okay, not even 1%. So what does that tell me? It tells me that the majority of people are small owners. Okay, it's well distributed. Okay. Now, I think what he meant to say is that 90% of the wallet are inactive. Now, let me go back to Jeff Booth. Point is that most of these people are hodler, meaning that they understand that Bitcoin will always go up in price, and all you have to do is just accumulate it as much as you can, right? Over time, right? And so when they buy it, they don't sell. So a lot of hodler out there. So that means, in my opinion, right? So let me get this out here. That means that the price fluctuation that you see in Bitcoin going up and down like a maniac, it's only 10%, okay? 10% of float, right? Of course, Coinbase have a lot of that too, but even just 10%, give you that price action. So in my opinion, GME has a lot better perspective in terms of if the market is as free as the blockchain would be, okay? But that's not the world that we're living in. I hope you understand what I'm trying to say. Is that GME could possibly be a better, price appreciation in a price appreciation mode if it's being traded on blockchain, because I would say 95% or more, actually. I think 99%, because look at the volume, you guys, right? So close to 100% of us actually hodling this thing, okay? And of course, depends on the price. If the price is high enough, you're gonna see more volume coming in, so that yes, some people are gonna jump out. Just like when it goes up to $80 at one point, and all of a sudden you have some volume because people are willing to sell, at $80, and they were or $60 or whatever. They were happy with that, right? But the point is, like, if GME were to trade on blockchain, just like how Bitcoin is, then the price action would have not been so, they call it wet blanket, okay? There is a freaking algorithm that has that term. And it just means that they are able to algorithmically bringing the price down, based on the computer trading there. So high frequency trading is a real thing, you guys. So that's what we have in the traditional market. But with the blockchain, though, you have a different system, because no matter how great you are at, manipulating psychology of people, okay, if the chain doesn't give you the ability to short it, Bitcoin, because every time you short, people would just buy it and store it away off chain, just like what is it called? What is it? DSL? Direct register thing. Oh my God. DRX. DRS. Oh my goodness. Just like how when people are DRSing or diamond handing, their shares and not ever put it back to the float. So the same exact thing. It just happens in Bitcoin chain. Now, people could trade off chain. That's what institutions do. Like Coinbase, for example, they might buy it in a bulk, but off exchange too. So yes, they could make deal among themselves so that they could transfer Bitcoin, offline, so that the price don't get to see that. But again, you have to have, you have to have a supply of Bitcoin to do that. And so, Binance and all that stuff could technically do it. But again, Binance is liable to buy that coins back. If the price is higher, they're going to be liable. So technically they wouldn't be making that stupid of a choice. But if they do, they would be liable because their depositor is going to be like, okay, I want my Bitcoin back, right? Because at some point, people are not going to just store their Bitcoin on the exchange because they realize that some exchange is going to go under. And so, or get hacked or whatever. So at least they are able to buy their Bitcoin and then just store it in a cold wallet and all that. So that's going to create that dry environment that they cannot do this anymore, right? Satoshi split, what is it? I don't know that term. Okay, split his wallet with a small amount with little Bitcoin in each wallet. Okay, he has thousands of wallets. Okay, that's cool. I mean, hopefully, what is the reason for that? I'm sure it's just to, distribute the wallet in that way. I mean, again, like 0 point of attack, right? Because if you have too many Bitcoin in one wallet, you will be more likely to be attacked by hackers and all that stuff. The only way that they could hack it is for you to, show their seed phrase or whatever. So as long as you have the seed phrase in your head, and not storing anywhere on your computer, you'll be fine. You'll be able to access and that's the genius of it too, is that, if people realize what this is, they won't, some country that that have their government inflation going crazy, right? They would be able to use Bitcoin as a store of value and have something left at the end of it. But the sad part is just that people are not knowledgeable about how to use Bitcoin, and the people are in control. The world governments out there, they don't want this. That's why, again, there's a lot of campaign to make this technology either banned it. IMF already issue a statement to El Salvador's president. Okay, hold on 1 second. Let me go back here. So there's a news coming out here that the IMF, okay, the International Monetary Fund, is trying to say that the president of El Salvador cannot buy Bitcoin anymore. So again, there might be a ramification. So why is there a concerted effort to stop this if it's not a threat for them, right? Now, the IMF also works with Ripple as well. That's a scary part, but again, I'll talk about that later. But it's a bit more complex than that. But let me go back to this concept over here. Definitely need a cold wallet. Never leave token on the exchange. Of course. Now, I'm guilty of that because, cold wallet, it's just so tedious, you guys. And then, see, I don't even own one. I should though. I don't have millions of dollars in Bitcoin yet. So I'm not as scared at the moment. But as XRP, I have XRP. As my XRP going higher, I feel, I might have to buy hard wallet one of these days. Okay, but right now it's on a exchange of some sort. I'm not gonna reveal what. So I don't want to get attacked. I'm a scary cat for sure, you guys. I don't want to reveal anything. Who knows? I might be a billionaire one day and then, just kidding, you guys. Well, not really kidding. If it happens, it happens. Okay, let me go back. Sorry. Enough clowning around.
a system like Bitcoin before. There's no so all of our ideas are coming from that system, and so it would be normal from that system to measure number go up, but just and think through this at a first principles level. If you are saying number go up, you are actually part of the centralizing system. The natural state of the free market is deflation. We've always a credit-based system cannot allow deflation. Fair?
Yeah. That's
Okay.
fair.
So both those statements are true. So the credit-based system is based on a piece of paper that everybody's measuring the world and thinking the piece of paper is solvent, right? And that money is lent into existence. So even if you just paid back all the debt, there'd be no money left, right?
Yeah.
So it makes your head kind of scratch, right? So that system requires inflation. Requiring inflation is requiring theft and money. Requiring inflation is a centralizing function. So if you're pricing from the system that is requiring inflation, and this natural state of the free market is deflation, then you're part of the centralization of Bitcoin. And I'm not expecting everybody to know this today, tomorrow, anything else, but in time, that's why I just keep saying, if Bitcoin stays decentralized and secure, it actually doesn't matter if you want to price in the piece of paper or not. It doesn't, and a lot of people will trade their Bitcoin for the piece of paper so they can buy it, and they'll get rich in that process, and they'll think they're getting rich, and they'll trade to the piece of paper. But over time, as that centralizes more and more and more, a lot of people won't run nodes. A lot of those people will trust the centralized entities with their Bitcoin because they got rich in it, and it'll centralize further. And if that continues to happen, because these two systems are opposites, they cannot coexist, right? Without centralization. Yeah. So if they can't coexist without centralization, and you're part of the system centralizing, then at some point, those people will probably trust other actors to hold their Bitcoin.
One ticker, one trade every week. Hey, millionaire trader.
And they'll get wiped out by the system that is decentralized and secure, bounded by energy. That is a likely outcome down the road sometime from a mindset of people pricing in a fiat instrument, just like they did to gold. Exactly the same thing. Because what would happen? Gold would centralize, and then you would attack gold. So you could argue that these different worlds, right? So it could never scale without fiat, right? That's what your argument. And fiat needs to be an inflationary system, and it will cheat, right? Humans cheat, right? And if you can control a system that steals from other people a little bit, you will. So that system will continue on that, and it'll break again. In other words, even if you resolve the current balance sheet issue, because Bitcoin went up so much in that, and it looked like your balance sheet was better in that state, it will break again, because the natural state of the free market is deflation. And we should have exponential deflation because productivity is moving exponentially. So that system will break again, even if Bitcoin measured in that system goes to $2 or $3 million or whatever, and then it trades sideways for a long time, and then it breaks again. That system will break again because it's not the natural state of the world, and we've always trusted that. That's actually why we've always gone to war, to reset the currency, to blame those other people. And after the war, we set up institutions that shall never forget, and we memorialize all those people, and then we start the process over again. And that is actually the process, that centralizing process that leads it into more centralization and more breaking and more manipulation of markets and misallocation of capital, is the same reason we then divide society and then go to war to reset it. It's always been out of money. You need to debase all your currencies. You need to, because the natural state, productivity should be flowing to you. So why this is so hard to see is we hold on to one part of, so when there's been a big change, often we can't see the second and third order derivatives of the big change. We hold on to our mental view. Even if we understand the change at one level, we hold on to the other view we had. And here's an example. What would happen? So then if the natural state of the free market is deflation, and we know it's deflation and productivity is more deflationary, what we do while we're doing this is, but what if we lose our job? How are we going to survive? Because all prices, we think about the prices being this price and going up, even if we get this, which they won't be these prices. Prices will fall everywhere. And so as you lose your job, or if you lose your job, you don't need the same job to be able to survive, because prices kept falling. That would be the natural state. And there will be constant attacks on what I just said. And the only thing you need to know is does Bitcoin stay decentralized and secure?
Jeff Booth challenges the flaws of our inflation-driven monetary system, calling it a cycle of centralization, inequality, and eventual collapse. He contrasts this with Bitcoin, a decentralized alternative that aligns with the natural deflationary power of free markets. Booth warns against measuring Bitcoin solely in fiat terms, as doing so risks repeating old mistakes. He highlights Bitcoin's potential to break free from manipulation, urging a focus on its decentralization and security as a pathway to a fairer and more resilient economic future. He further highlights Bitcoin as a revolutionary force, enabling a free market where competition drives innovation and prices fall with rising productivity. Unlike fiat systems reliant on inflation and centralization, Bitcoin aligns with the natural deflationary state of markets, empowering individuals over monopolies. Booth envisions a world where Bitcoin enhances purchasing power, lowers costs, and fosters global financial equity. By embracing Bitcoin's decentralized and secure protocol, he argues, we unlock extraordinary opportunities for value creation and economic transformation. Let's watch more clips from the interview.
Bitcoin itself isn't deflationary. Now, it could be if people lost coins, it could be deflationary. But Bitcoin is a neutral currency, which allows the free market to work, and the free market is deflationary. Right? And why is the free market deflationary? Because we compete with others to provide more value than what was there before. And if you do not provide more value, you fail because no one uses your thing. Right? Or product or service. So in other words, you come out and you create a podcast. Right? And if your podcast doesn't provide more value, nobody watches it. Right? So you're competing with everyone else creating podcasts to create more value for people. If you don't, you fail. And the output of that and how the podcast's done today, now we're in person right now, and we're in person because we're in meeting together. But you can do a podcast now anywhere in the world. And where you used to always have to travel and the production cost and the cost, it was an extraordinary cost to find people. Now you can do it with a fraction of the cost. And that fraction of the cost is going to come down a lot more with artificial intelligence and the like. So you're competing with new tools that are invented by our minds, right? And other people trying to create value in the free market that are constantly competing. And the output of us using the thing that gives us more value is prices fall. How could what I just described, where do you get anywhere how prices could rise in that system? So if you can't, right, then you realize the only reason prices fall or rise, the only reason is you don't live in a free market. You live in a control system. You live in a system where inflation shouldn't be measured from zero. It should be measured from the productivity rate of the world, which would probably be -5 today, and then maybe -7 next year, maybe -15 the next year, right? As more and more people tried to compete to provide value to you, and you use the things that give more value, and the output of that is prices fall for everybody. That's the world you should live in. So it's almost why it's so hard for people to understand this, and there can't be a monopoly for long in a free market. It's impossible, because the monopoly increases, the price increase, the margin increase from the monopoly has everyone attacking that monopoly with a whole bunch of new creative ideas to be able to why? Because there's so much margin to gain there, right? Entrepreneurs don't create the next calculator app anymore. They try to create where there's more value. And so it's just a natural place. So the monopolies exist today, and why the monopolies look like they do, and they're getting richer and richer and richer relative to you and extracting more and more because they live on top of an extractive system. And it would, of course, look like that. And essentially, they are the opposite side of the productivity that's supposed to flow to you, getting extracted from you. That's what the monopolies look like today. And how do you compete against those monopolies inside that system? How could you create the next Google? You can't, because they're so all powerful, and all of the people using the service, is making them more powerful, making more AI inside a system that's extracting everything from those people. That's all social media on the centralized platform looks, and everybody contributing to it is actually getting worse inside that system. Well, they're all trying to get more money in it, right? And they're driving it, getting it worse. And so you can feel around the world what I'm saying. How do you create? It wouldn't be a monopoly, but if you measured in Bitcoin the gain that what you're making instead of in fiat, what you're making is going to go up. Is going to go up in purchasing power forever. So the sats I give today every day on Nostr, which will buy coffees today, will buy cars in the future. That's what it will look like.
Yeah.
And so if you're contributing your time today and you're patient in that time and you're tuned out of this other world, you're going to be extraordinarily benefited from creating value for other people in an area that accrues more value to you because you created more value. If you measure Bitcoin and energy in Bitcoin, you can already see energy prices falling. Mm-hmm. If you measure any raw materials in Bitcoin, you can see raw materials falling. So the inputs to the things that we're talking about are also falling. So Bitcoin, it's not maybe. Bitcoin is the first truly global free market we've ever experienced. And it's just going to expand, and free markets are more productive, far more productive than controlled markets. So if you're in Bitcoin for any 4-year cycle, you know that all prices fall, right? Mm-hmm. Your representation of what you think is happening might be, because you're still living in Bitcoin in the other system, you might think it's rising faster than your other prices, right?
Yeah.
And if you didn't have Bitcoin, you're getting destroyed by the same system. You're losing money, right? So let's say so that means there's a whole bunch of people with varying different degrees of understanding, and all are correct to their view, right? But Bitcoin doesn't care about any of the views, right? It's just a decentralized secure protocol bounded by energy, and it's imposing new rules. That you don't have to play by the rules if you don't want.
Jeff Booth highlights Bitcoin as a groundbreaking solution to the flaws of our current financial system, which he describes as inherently extractive and inflationary. He explains that inflation, often seen as an economic norm, is a hidden theft that siphons away productivity gains meant to benefit society. In Booth's view, the natural state of a free market is deflation, where competition and innovation drive prices down and value directly benefits individuals. As a decentralized and deflationary system, Bitcoin offers a stark contrast by aligning with these free market principles, enabling value creation without the centralization and manipulation that define fiat systems. Larry Fink, CEO of BlackRock, echoes this sentiment, describing Bitcoin as a hedge against inflation and global instability. He notes its growing appeal to institutions and sovereign wealth funds, with some debating Bitcoin allocations of 2 to 5%. Fink predicts widespread adoption could push Bitcoin's price to as high as $700,000. This aligns with Booth's assertion that Bitcoin's decentralized nature and limited supply make it a unique financial instrument in a world increasingly driven by centralized control and diminishing trust in traditional systems. Both Booth and Fink underscore the transformative power of Bitcoin, emphasizing its potential to empower individuals and institutions alike. By fostering a decentralized, transparent, and fair financial ecosystem, Bitcoin safeguards wealth and enables a future where productivity and innovation directly benefit society. Together, their insights challenge us to rethink the foundations of our economic systems and consider Bitcoin's role in shaping a fairer future. As we wrap up,
Yeah, wouldn't we all want that? Sorry, that was a long one. I haven't listened to it, like the complete. So I was just like, let me just enjoy it. I hope I didn't, put everybody in sleep over here. So again, the system that Bitcoin is trying to impose is just like that. again, and you could just use it as a, an opposition to what we have right now, because what we have right now don't work for regular people. Only works for the people that have the control over our monetary system, which is the Federal Reserve on every single global country on earth. And so how can we get away from that, right? And so, the best thing that you could do is to compete with each other, for crumbs. And how fun is that? I know, but eventually, even the toughest people would still get tired of it, and no wonder, society hasn't been growing as advanced as we wanted to, because there has been a pervertive incentive to not want to grow, because like I said, monopoly, right? Like he was saying, who's going to compete with Google? Okay, because every competition apps out there are getting crushed by Google, and so that's why the role of the government is to break up a monopoly. But now, we have a system where the government is now have to step in and try to give us at least some of the control. But again, depends on who you think Trump is, whether he's going to be the one who do that. I doubt that he's going to do stuff like that, but I'm hoping that at least he has an idea about the Federal Reserve and all that stuff, or hire the right people to complete the job. It's a complex issue for sure. It's not going to be fixed in one term, you guys. So it also require all of us to understand what the system is, to dismantle it in your own life, in your own way. To set yourself up for success, in a sense, right? Without taken away from any other people, rather than try to burn the bridge. When you get there, make sure that you bring a lot of people along with you, because the world in isolation is not the world to live in. You need diversity, you need different opinions, so that you become more advanced. Because if you just agree with the people that you rub your shoulder with, that's not you're not going to grow. You have the people to, yes, it's fun to have people to agree with you, but to grow, you have some disagreement, so that you have some different perspective to go about a solution. Some problems, certain problem is too complex for people to solve. And so if you have people who doesn't know how to solve the problem, find another soul to do that. Anyways, it's a long-winded way to say that we need free capitalism, okay? Because if it's not free, you have a system right now where debt is the only solution to the problem, and the problem just gets worse and worse and worse when people are not able to afford anything. Selling everything. A good example would be right now, they're trying to make everything as a subscription base. So you don't even own your TV. You don't even own your phone. Pretty soon you'll be like, well, in order for you to use this app, you have to pay so-and-so, So it becomes that bad. Like, remember, I don't know if you guys have heard about the BMW, trying to lock people from using the heated seat unless you have a subscription. It's becoming that stupid, you guys. Like, again, you buy the whole car thinking that you're owning it, whatever function comes with it, but only to find out, oh, just kidding. You have the function, but you have to subscribe to it to to be able to use it. And again, that's the extraction value that he was talking about. It's all about extracting wealth, and no longer that BMW has to make a better, robust, or cheaper car to compete with other people, but because nobody could compete with BMW, and because other car manufacturers are trying to do the same thing, there's no competition there. And yeah, eventually, one company is going to own car manufacturing, and they're going to be able to implement this type of subscription-based type thing. And that's why, again, it should, like he was saying, everything that we do right now should cost less. But for some reason, it costs more and more to do what? Just to be able to breathe, to be able to go home and just relax. You can't do that anymore, right? You have to have 2 or 3 jobs now to get to do what you want to do 10 years ago. And so, you've heard of people struggling with income and all that stuff. So no matter how much raise you think you got, it's not keeping up with inflation. Because the inflation is more than 3%. The official number is close to 10% a year. Much closer to that. I mean, do the math yourself. I mean, just look at the groceries, how much it used to be. So the official number is a lot higher. That's why the value of Bitcoin is going to continue. All right, guys. All right. Hackers took around $1 billion. Yeah, I heard about that. Let's see, pump and dump. I understand. So Bitcoin is a little bit different than crypto, because Bitcoin is the proof of work was the original idea. Yes, people are trying to mimic Bitcoin and all that stuff. The idea in and of itself. That's why Ethereum pops up. That's why we have XRP to try to compete with the idea of digital cash, peer-to-peer, and all that stuff, decentralized type of deal with a different mechanism, consensus mechanism. Okay, so understand that Ethereum has their own consensus mechanism, while XRP has their own, and proof of work is what Bitcoin route themselves into. Yes, it's slow for sure. And it only do one thing, which is what you want money to do, because you don't want to program money, okay? Yes, that's have its own function. You could argue that we want to do more with our money. But that's also open up a can of worm where people could just like manipulating you by misleading you. It's like, oh yeah, allow me to borrow your Bitcoin and I'll return something to you, right? Yes, if that... for the honest actors out there who are able to, turn it, make Bitcoin 1 to 2, right? But in order to do that, you have to extract those value from somewhere else or someone else. With, the lending issue, that's another problem that we have to kind of address in the financial market. But blockchain, as far as what Bitcoin could do, it's just a means of exchange over the internet. So it's as simple as that. Okay. Now, all of the shenanigans that happen, the meme coins pump and dump out there, happens on different chain, but these are the tactics that they're using to discredit what Bitcoin is. That's why you hear that narrative. Bitcoin is a scam, it's only used for drug dealer pump and dump, but without understanding what Bitcoin is. It's very easy to confuse people, you guys. The same way how they use AMC to mislead people into thinking that GME is a meme coin or meme stocks, okay? The same exact psychology. That's what I'm seeing here. Again, that's based on what I understand what Bitcoin is before, before the media kind of put those thoughts into my mind. So, thank goodness when I study Bitcoin, I used to study based on the technology part of it. Like, why is it so important? And how does it work? So I'm more curious about that part. And then if you understand the cryptography and the genius of it, you'll be like amazed. Like, how can anyone think about this, and able to solve the double spend issue. And not only that, have turned into this new way of kind of storing your value, Yes, the volatility will be there. It's going to scare most of you until it's not anymore. So, but volatility also is a good risk and reward as well. Because if you get in early and people are not agreeing with you, I'm sure, I'm willing to say 80% of people still haven't understand what Bitcoin is. So you're the early top 20% if you own Bitcoin. Okay. So let's see. How do I know that? Well, look at the graph that I show in Morant shows, right? So that graphs will tell you the breakdown of how many, and again, like, there's more billionaires out there too. The top wallet that has $10 million coin, $10 million over, are only the top 1%, right? No, a tenth of 1%. There you go. And so if you have $1 billion, yeah. So calculate all around the world how many billionaires out there that hasn't have Bitcoin yet. See what I mean? So yeah, just wait for the billionaire to agree with you, and then there you go. Or the people that manage the billionaire's money to agree with you, then there you go. The same way with GME. Not many institution who's smart enough to figure out this yet. Okay? So therefore, that's why we have this volatility. That's why these shorters are not scared yet. Shitless. Well, they are actually. But, they're able to convince all of the institution out there not to take money yet, or at least not to put money in GME yet, for whatever reason, right? But it's coming. They're gonna, throw money into GME for a short time, because they're gonna chase value. When the market crash happen, what do you think's gonna happen? You think GME is gonna sit down forever with that money slushing around? No. I just think that leadership didn't see any value in any other, instrument yet to invest the money in. Remember, he has an inspiration from Warren Buffett. Okay, so he has a hybrid, Warren Buffett and car icon. So study those two. Leadership, and then you understand why GameStop is doing what they're doing. The conservative basis and the radical, what is it called? Activist investing. Okay, because again, he was setting up to change GameStop as a company. Okay, so that's noble to me. Okay. All right. Sorry, you guys.
Most power players.
I know, I'm going to keep going, you guys. I know it's been a long time, but this is just Bitcoin education, okay? Don't, there's so many facets out there, okay, that you have to learn a lot. I know. These interviews are my bread and butter. No. Let's see. Some regulator, am I? I feel like I cannot read. Okay, difficulty, monitoring money laundering and terrorist financing in. Okay, some difficulty. No, I mean, it's trackable. Like every transaction that ever been made on Bitcoin chain, is trackable. So these type of thing, yes, you could launder money all you want, the beginning of it, but that's the worst medium of exchange you use for terrorism purposes, right? Because again, it could be tracked. And so as a thief, you wouldn't be smart to use a trackable, mean of exchange. So yes, you could hire, you could teach, you could employ like the top hackers out there to hide your intention, but you cannot to be able to transact on the chain. And people who want real Bitcoin, they want that transaction to be done on the chain, because that's going to be the settlement system that is automatically they call it triple accounting, because not only that it's final, it's instant, and it's accounted for. There's no counterparty risk that is associated with that. So the point is that it's trackable, and you're not going to be able to get away with the crime if if law enforcement could prove that's what you're using for. That's what you use it for. The best way to do crime is to use cash, because it's not trackable, right? Just go ahead, a suitcase of cash somewhere, and then there you go. It's not trackable at all, unless you're being watched, right? With every step that you take. So, just my opinion. Obviously, you could have your own. When we show up in screener, thanks to the large profits, the pilot, of course. Well, I'm not a smooth criminal at all, but if I have to commit crime, sure, we'll use cash. Oh my God. Okay. I hope algorithm's not gonna pick up on this and then monitor you and I, Carter. So let's stop about that. Okay, so this segment here, it really okay. I know it's gonna be a little bit long, huh? Hold on, let me.
Bitcoin for the house.
Okay, so this part right here. Earlier he was mentioning how he used. Okay, so he had a lot of Bitcoin because he was the early miner and all that stuff, right? He used to mine Bitcoin and lose a lot. But anyway, so at one point in history of his life, he used 100 Bitcoin to buy a house. Now, he didn't mention how much the house was, but 100 Bitcoin now, it's like $8 million. The house wasn't worth $8 million. So that's the value proposition, right? You thought that whatever you're selling your Bitcoin at was sufficient. All you have to do is just wait a little bit longer, like maybe, in my opinion, 2 cycle. You're gonna be so glad that you didn't sell your Bitcoin. I'm telling you, everyone who sell Bitcoin in the past history, okay, recent history, regret it 4 years ago. Everyone who sell Bitcoin 4 years ago will regret doing that. Okay, so anywhere before that too. So people who are buying it now, selling it at whatever 100,000, 200,000, or 400,000 is going to regret it when you're on the other side, next cycle. So that's the whole point. Is that you have hodl. Okay. Gamestop. Won't stop. Yeah. Okay, let me play this part right here, and I'll be right back. Though hopefully I'll be back before that.
I still can't get over the 100 Bitcoin for the house. Wow.
Yeah, me neither. So I'm alive on the outside, but I'm dead on the inside.
So we live in this fiat world that is all based on debt. And a lot of Bitcoiners would argue that the Bitcoin standard is one of equity. So how do these two worlds really blend? Because I've heard some in the community say, we don't need credit on the Bitcoin standard. Why would we even have debt? How do you answer that?
Yeah, so that's when I first started out, I always thought, hey, Bitcoin's going to end the banks. Bitcoin's going to end this scheme. But there's nothing wrong with banking. What's wrong is fractional reserve banking. That's what's wrong. It's fractional reserve banking. It's that banking business model of fractional reserves being legal that creates the problems, because that's what allows for the infinite issue of credit. But if you have something that is non-fractional reserve, if you have collateralized credit markets like you see in Bitcoin, in the free market internet economy of decentralized finance, now you have a healthy credit market. Now you have a credit market that if it gets too far ahead of itself, the leverage in the marketplace is obvious. And what happens is you get a credit washout, you get a reset. I would actually say that that's exactly what happened just the other day. Bitcoin price went up to like $104,000. Everybody and their mother decided they wanted to go long Bitcoin with leverage, because once we broke 100, we're going to go to 108 and then 120 and 125. And then all of this leverage credit, Bitcoin drops all the way down to 92,000. All of that leverage credit gets washed out.
Yeah.
And now we're right back up at 100,000. So see, when you have a credit system that is tied to a collateral, the credit can actually be destroyed. It can be washed away, and the mismanagement and the over leverage get washed away. That's our biggest problem in fractional reserve banking. It's too big to fail. We are not getting the negative side of the business cycle. The natural business cycle has a phase where there is supposed to be destruction. It has a phase where there's supposed to be deflation, and prices are supposed to come back down. You know what that does? When prices come back down, demand increases. And that's where the economy can really start to rebound. That's the crux of the problem right now. We are stuck in an inflationary recession. Everybody is waiting for a recession, but they have said that a recession means prices equal lower. Well, no, look what happened in Venezuela. They did a demand destruction campaign that was so effective that people only wanted water and food, but the prices still went up because the source of inflation was not the economy. It was the abuse of the currency. It was the abuse of credit extension of those debt notes. And that's what's happening. So those people are right in saying that, yeah, we don't need a fractional reserve credit system that allows for infinite credit creation that's too big to fail with no reset. I agree. But we do need a healthy credit market that's tied to a pristine form of collateral that allows for and mandates the destruction of paper Bitcoins. Look no further than Sam Bankman-Fried and FTX to understand if you're going to sell paper Bitcoins, you can get away with it for a little bit. But when the chickens come home to roost, if you don't have the money, you're going to be liquidated. There's no such thing as too big to fail. You're going to be destroyed. And that's a healthy credit market, and that's a healthy credit cycle. And we can get that going again if we embrace Bitcoin, especially with a Bitcoin recapitalization fund.
Yeah, that's an important point because, again, this is what is happening in our traditional markets. Oh, you guys, come on. Like, I'm going to be so hot-headed in this next point because this is why Jimmy hasn't seen any price action because of the corruption that is happening behind closed door. You know, the destruction of capital, I'm telling you, is worst in the, you know, like egregiously so. You know, you've experienced it. Because I can. Why is the suitcase beeping? You're talking about like the suitcase full of cash. But anyway, but how do you get away from that system, right? And so that's the challenge that we all have here, trading in this market, thinking that we are, you know, at least fair and square. It's not a fair market. You know, it's demonstrated time and time again because a group of people have that, you know, at least, whether you say they're smart or not, I feel like they're just predatory. And they're not playing fair. Now, the reason why they're up top is because they have the connection of the people that are, you know, have the ability to suppress certain things because of whatever, self-serving. They're not there to facilitate the market And the original function of a market maker is to facilitate the transaction no matter what, unbiased. Okay? But because if you increase the price or let the market be free and let buy order go into the lit market every single time, somebody lose out on the end. And so that's why there's a manipulation there. It's simple, very simple explanation. But because it's happening in the dark, there's a lot of people would be like, oh, this is why people think that we are in a cult, because we are investing in a company that we believe in. Simple. And it's hard to shake people's mind. I feel like even the most educated people in the market don't even know about naked shorting. I'm telling you. Yeah. So time and time again, unless you are in that world, of naked shorting and all that stuff, yeah, there are people who try to whistle blow about naked shorting 13 years ago. Okay. And that problem was still happening. Remember, somebody sued the NASDAQ trillions of dollars, $2 trillion. Hold on, let me try to find that one. And that lawsuit just got falling from the wayside. Was sued for $2 trillion, I think. Don't remember how. Okay, back in 2011. It was on Bloomberg. Wait, no, that's not the one. Sorry. I think for naked for... Unless that was just sorry, you guys. Let me play this real quick before. Let me play the rest of this.
Oh, that's so true. Everything you just said. It's fascinating. I mean, I have friends who think that because of the outcome of the election, suddenly all prices will come down and we will see deflation. And it's like, no, if you understood how the monetary system works, you would understand that they need the inflation. And once it hits a certain level, it's very difficult for prices to come back down, especially in the things that matter the most. And they're going to need to continue to print more. Hopefully, Bitcoin can bring some sanity into this whole situation. But I'd love to get just your macro forecast, because there are so many moving parts to this, and the macroeconomic background, I think it can be confusing. They tell you the economy's strong, but yet they're creating jobs basically only in the public sector. A lot of people are struggling. Credit defaults are up. Everyone's putting everything essentially on credit cards just to afford life. How is that going to work as this administration takes office? Do you expect things to sort of crash up like some analysts say? And how will the average person afford life if that happens?
So that's actually one of my biggest fears before the election, that we were going to move from an inflationary recession to a hyperinflationary depression, where prices were going to crash up and things become so unaffordable that the economy just slows down to nothing. It's like what happened in Venezuela. I was saying they only had the water and the food, but prices still went up because the economy, you can destroy the economy. It's not going to fix the issuance of new currency units. You have to kill it where it's coming from. So before the election, I was afraid that, we would get into a situation where trust could be lost, because the only real difference between inflation and hyperinflation is trust. It's the trust of the people who are using the currency. If they lose that trust, there's nothing you can do to convince them. The economic textbooks would like to think, oh, once we hit a 50% month over month, that's hyperinflation. No, you cannot define it with mathematics, because it's a social structure. And and whether you're in Greece or Rome or Weimar Republic, when trust was lost, that's when they moved from inflation to hyperinflation. Well, I think with the new administration coming in, and with the strategic Bitcoin reserve and potentially a Bitcoin recapitalization fund, we're actually pivoting on that trust trend. The trend that, how much have you trusted the government? You trust the government more yesterday or more today? The trend has been very clear. Trust has been being lost. But with this pivot and the pendulum potentially swinging back to the other side, we could rebuild trust. And now what we can do is we have two tools. We have money and we have currency. And people mistakenly think that the dollar is money, but it's not. It's just currency. It's just a medium of exchange. So now it's like saying I have a nail and I have a hammer. Well, they're both good tools, but one without the other doesn't work that good. When we use money and currency together, we can actually move forward. And I think that's what we're going to do. We're going to use Bitcoin as the pristine collateral, borrow currency against the Bitcoin, allow the government to try to spend the way out of its bad decisions, but at the same time, protect our balance sheet, because the more money that they spend, the more value is driven into the Bitcoin asset class. And the more value that goes into that asset class, the more value we have on the asset side of our balance sheet. So finally, we can expand currency units, but then get a return that's greater than the dollar expansion on the asset side of our balance sheet. The economy wasn't cutting it. So this technology, this savings technology, isn't just for we the people, but it's actually applicable to businesses, funds like the Social Security Fund. Pretty much everything that you see in the government budget can actually turn around if we properly design policy to leverage the power of Bitcoin. And for that reason, I've never been more hopeful. I really do think that this is the best chance we have to stop the Ray Dalio arc from falling and letting another superpower take control of the world of finance. And we could reestablish our dominance for another 250 years more.
Yeah, there's
Wow. That's a good idea, huh? No, I don't know. Well, of course, that's a longer, I feel like 20, 30 years from now when people really, truly understand what value is, okay? Value created from a unit, okay, a unit of measurement that is subjective. But, okay, so Bitcoin right now just competing with gold. It's not competing with dollars at all. I think that's the misconception, is that people think that Bitcoin is competing with the dollar. No, it's a store of value. Obviously, gold is going to be one of the things that Bitcoin is now competing. But eventually, after people, again, depends on who you are. You would much rather hold Bitcoin or gold, right? So younger people, obviously, I feel like gravitate toward the digital gold more so than the physical gold. Yes, but two of them could still exist at the same time. You don't have to compete, but because the money is going to flow into value no matter what. So the traditional sense, obviously, central bank has been buying gold like crazy, right? Whether they're shorting, you've heard about that a couple of weeks ago, so understand that. So again, that's why a flight of safety is coming. Is it going to be worse in the next few weeks? I think so. Yeah, the market might continue to downfall. But, with the system that we're living in, obviously, the goal for the Federal Reserve is to keep price elevated at all costs. Remember, price stability is what Jerome Powell always speak about. Dual mandate or whatever, low employment and low inflation. But again, that inflation, they say we're trying to keep it at 2% a year. That's not the complete, that's not the true inflation. So when that type of system we're still playing in that system, so the next course of action would be turning back the money printer on again. And so that's going to cause the price of whatever, gold, house, food, whatever, to go higher. And again, at this time, instead of printing $2 trillion, they possibly could have print, 5 times that, $10 trillion to fix the next one. It's that bad, you guys. And again, when you don't create any value for those $2 trillion back in the Corona time, no wonder you have inflation. So inflation doesn't come from Trump, Biden's. Yes, they do kind of add on that because of the government spending and all. They could have just let those industry gone. Like the airline industry should have been gone, should have been completely decimated because nobody's flying. But instead, we bailed them out. Instead of yes, if you want to help the working class out, just send them check directly. Why do you have to prop up this industry, right? And so the free market would have bought it back up, restructure the company, and people who took that risk to take, that side of risk would have been able to buy that stock at a very low price. So that's the deflationary calamity that they don't want to go through, because then it makes things cheaper for the regular people like you and I get to buy, the asset price. And so again, somebody gotta go through the hurt, right? For you to gain. It's a zero-sum game, just like the stock market. But we have a system that pick and choose winner and loser. Even though, you shouldn't pick and choose and let the free market decide, we don't have that system right now. Therefore, GME is going to have to fight for that right to be in that rank. And thank goodness, retail like you and I have understood that. Hopefully, more and more of us going to be in that camp. So, yeah, it is what it is. Oh, wow. Very aggressive over there, Babylon. Sure, yes, that works too. Let me see. Rent in my area went up. Look at that. Like, that's crazy. Whew. So if you calculate the inflation, right, that amount of years should not have, create this much if the inflation is only, 10% or whatever. Even in 10% increment in those years don't amount to this. Well, it depends on what your rent is before Corona. If you want a real result of the real money study with gold back area, yeah. I've not extensively, but I know that we used to have gold as currency. As we create currency, we have to back it up by the gold standard or whatever. Apparently Nixon was the one who take away from that, but we used to have so much trust in our institution. That's why we have the status of world reserve currency, is because we have the most amount of gold here in the US. Okay. And so when they were, trying to build the world after the war, people decide across the world that the US is going to be the world reserve currency, and they're going to use us for that trust. But that trust has been kind of eroded because, the idea of printing money, more money in circulation than the amount of gold. And so the same exact thing, right? More shares into the system than the amount of shares is being sold, or the amount of shares, more shares out there than the existence of the company itself. Same exact idea here. So that's the problem when you have the central authority who thinks that they could just do this till the end of time. That's the problem. That's why, free speech is important, right? Because when we're pointing these things out, it wakes people up, and hopefully, people, more and more people realize that. And that's how you break the system, is to wake people up as much as you can about the stock market, about what you want in a free society. Because if a group of people are just controlling you, your lives, your way of life. I just saw, oh my God, you guys, this is just off topic over here, but there was a crazy video about, hold on, if I could find it, I'll show you. How many group of people around the world, around the US, that use it in today use? Go back. I don't know. I'm not quite sure what that statement is about. I'm a bit slow, as you know, because I can. So be specific. Let's see. Okay, this is about crypto trading. Bitcoin. Let's see. The great debate. This is high frequency trading. I think I showed this one already. Never mind. Okay, so this is the IEX CEO. Again, you could learn it on your own if you want to learn about that one. Okay. I don't think I want this one. Okay, let's move on to the interest rate here, because this is important for the current, state of affair, I feel, because, you have Trump in office right now. And of course, people are ups in arms about the tariffs war and all that stuff. And I know people, have mixed feelings about that. I'm not quite sure what my opinion is, but of course, I agree with most of the stuff that he's doing, at least to try to cut down expenses. The only thing that I disagree with is the, Israel, side of things. So that's a separate issue. But as far as market goes, right, the interest rate needs to come down, right? That's what he wants, and he's going to get. Okay, so however he's going to do it, the Treasury, Secretary of Treasury already come out and say, this is what we're planning to do. And so better, think about that. So tariff is probably a play to force the hand of Federal Reserve, Jerome Powell, to lower the rate, because now you have a lot more people out of a job. And so, the scariest thing for these people is deflationary. They don't want that. And so what are they going to do? They're going to pump the money into the system. Okay. So that's why, again, that's why I don't feel like there's going to be a crash coming until, it's blatantly we're in a depression point of time. But yes, there's certain sectors going to be crushed on this. And my opinion is that the people that have massive amount of debt are going to fall from the wayside. Yes, they could survive with the amount of fund. Depends, right? But GME is going to thrive like anything, you guys. I'm telling you. If the money printing is coming back on, Bitcoin's going to go, GME is going to go. Again, it could be the last, that's why the super cycle, right? Every cycle happens, stock to flow. Just look at that. And every business cycle, you're going to see the global liquidity coming up again and perking up. And so, yeah, that's what we're feeling right now. And again, today's price action, if you look at the crypto price action, it comes down, right? Just a distraction, temporarily price pullback. So retracement, whatever you think of, okay? So don't freak out. I mean, if you have GME, if you have, again, unfortunately, GME is a is thought of, right, as a risky asset for whatever reason. Of course, we know it's not, but because of the the common conventional wisdom we have to follow that. So therefore, yes, if the money printer coming back on, lower the rate, comes lower, quicker, the quicker, the more enthusiastic people are going to get the explosion, okay? Because if he drops from 4% to 0, okay, that means like he's freaking out, okay? Like these central banker, right? He's like, oh my God, my asset is going to fall so quick. So let's just put the rate at 0. It happens before, you guys. And so that's why, you have to, kind of study that. Low interest rate, meaning stimulation is coming, a stimuli, or whatever. So just be prepared for that.
There on numerous occasions that he wants interest rates lower. In the past, the way that he has tried to accomplish this is basically by trying to bully the Fed into lowering interest rates. But that is probably not going to work this time for one very strong reason. The Federal Reserve began lowering interest rates in September last year, 2024. But since then, every interest rate the Fed does not control has done nothing but go up. In other words, ever since 2020, the game has changed. When the Federal Reserve lowers the federal funds rate, it no longer results in an outright reduction of all other interest rates like it used to. And so the path that President Trump and his Treasury Secretary Scott Bessent pursue, if they want interest rates to go lower for everybody, will have to be very different than it was before. From the 1940s through 1980, interest rates were on the rise. This is because in 1940, the debt to GDP ratio reached around 120% as a result of all the spending on World War II. You can see this was a wild peak, but going forward from the 40s through about 1980, the US government itself was able to deleverage, getting the debt to GDP ratio down to around 30%. The way this was accomplished was by interest rates going higher and higher while inflation was going higher and higher. In other words, the government used an inflationary deleveraging in order to push the cost of servicing the national debt onto the economy, and the Federal Reserve engaged in yield curve control in order to help them do that. It ended with a bang in the 70s when they had to delink from gold, but ultimately this trend ended in 1980 before it reversed itself. In the early 80s, the debt to GDP ratio had bottomed. Again, it was around 30%. So at that point, the US government had a ton of room to start levering up yet again. So from about 1980 through 2020, the US government continued to borrow more and more because interest rates kept on going down and down. The inflation rate along that way continued to move down and down as well because inflation had peaked in the late 70s and early 80s. So we had a new cycle of 40 years of disinflation, falling rates, and the government leveraging up. The reason the government could afford to continue to increase its debt is because the cost of servicing that debt continued to go down every time interest rates went down. They just borrowed more at a lower rate and it was easy to pay the bills. But the problem is in 2020, two things happened. Number one, interest rates bottomed out at around 0. And if you're controlling the global reserve currency, you can't go below 0. Even if you're not controlling the global reserve currency, it's very difficult to maintain interest rates below 0 for any significant length of time. So interest rates have a floor of 0. But the other thing that happened was inflation exploded back on the scene again. Just like happened in the 1940s, we saw interest rates bottom out and inflation start to come back. Not only that, we also saw a repeat of the debt to GDP hitting 120%, just like it did right after World War II. And so we are in a new phase of this long-term debt cycle where interest rates cannot continue to be pushed lower and lower for the long term, and the United States government must deleverage itself. This is why interest rates have gone vertical since 2020. And it is also why the Federal Reserve can no longer lower interest rates and have that influence the rest of the yield curve. If we rewind the clock to President Trump's first administration, we can see that the Federal Reserve was raising interest rates up until the end of 2018. This monetary policy was putting extreme stress on the stock market and ultimately started to cause a stock market crash. The Fed reversed course at the end of 2018, and then the markets finally started to recover. In other words, the Federal Reserve was trying to tighten financial conditions, and it was starting to crash the market. That's understandable, but At the time, everybody was saying, why are you doing this? We don't have any risk of inflation, just lower rates and let us continue to buy and invest and spend at lower prices. But that's not the case anymore. When the Federal Reserve lowers the Fed funds rate, it puts direct pressure back on inflation, which is already much higher than they want it to be, and much higher than every one of us wants it to be as well. And so if the Fed puts fuel back into the inflation fire by lowering the Fed funds rate, what it does is it makes lenders for all other sorts of debt say, hey, inflation's coming back. I have to charge more if I'm going to lend my money out. And so if you go to get a mortgage, the lender is going to say, hey, we have to cover ourselves for our loss in purchasing power over the next 10 to 30 years because the Fed just lowered interest rates, which makes government spending easier. So prices are going to go up, which means we have to charge you a higher interest rate. So we are in an environment now where if the Fed lowers the Fed funds rate, it actually makes all other interest rates like the 10-year treasury and mortgage rates go higher. And that's why when we look at the 10-year treasury yield, it has done nothing but move higher ever since the Fed started cutting rates in September. As a result of this, we have seen a shift in the focus by both President Trump and his Treasury Secretary Scott Bessent. Instead of focusing on saying, hey, we're going to try and get the Federal Reserve to lower interest rates, they're saying we are going to try and bring the 10-year yield down. Now, this is very important. The 10-year yield is kind of the benchmark for basically all lending. When you borrow a mortgage, even though it's a 30-year mortgage, you're most likely not going to hold on to it over the course of 30 years. The average lifespan of a mortgage before it's paid off because you either refinance or move is around 10 years. So the 10-year yield, the 10-year treasury, it is a much better benchmark of long-term interest rates for pretty much all lending than something like the federal funds rate is. And so Scott Bessent understands that if you want interest rates for everybody to go down, you've got to focus on the 10-year treasury yield. Now, just a quick explainer. If the 10-year treasury yield goes down, why would that translate into interest rates on other forms of debt like mortgages to go down? Well, it's because every lender is constantly looking at everywhere they can lend money to and seeing how much risk there is with that loan to determine how much they should charge. Right now, if a bank looks at the US government, they can say, well, if I give my money to the US government for the next 10 years, I'll earn 4.4% on that money risk-free, which means if they're going to give it to you to do something else with for the next 10 years, they're going to want more than that. And because lending to the US government is considered risk-free, the higher the interest rate goes on US government debt, the more that will soak up all capital from the markets. In other words, if the 10-year yield were to go to 20%, nobody would have any money in anything. You'd probably sell all of your stocks, you'd sell all of your real estate, you'd sell everything you have and just loan it to the government because you're getting 20% guaranteed risk-free from the government. Nobody else deserves your capital. So it would crush the markets everywhere, cause huge price collapses of all other assets because everybody would want to loan to the US government instead. The opposite is also true. Let's say the US government was able to somehow get the yield on the 10-year treasury down to 0.05%. Well, basically nobody would be lending to the US government then because you're not getting any return. If there's any price increases whatsoever, you're losing money to inflation. And so all of that money that was going to go to the government now gets freed up and is looking for other borrowers instead. This puts the borrowers back in the driving seat. The borrowers can compete and say that they will borrow, but only if they can get a lower interest rate, because now there's a lot more lending available to other people. That competition drives rates down for everything else. So by Bessent and Trump focusing on the 10-year yield, if they are able to successfully get this to be pushed lower, they will be successful in driving interest rates down across the economy, which will increase spending, increase borrowing, and increase growth, at least in the short term. Now, this is not something that they can just decide to do with policy. The price and yield on US treasuries are largely controlled by the free market and by participants who buy and sell those bonds. So it's not like the US government can just come out and declare, hey, the yield on these things is going to be 2%. And so if they want to achieve a lower 10-year yield, there are some things that they're going to have to do. One of them would be coordination with the Fed. Now, Scott Bessent, the Treasury Secretary, he recently just met with Powell, and so they could have been discussing a couple of things. Right now, the Federal Reserve is engaged in quantitative tightening, which means they're letting assets bleed off their balance sheet. This is financially restrictive because it pulls money out of circulation as they're not rolling those bonds over. A lot of these are US Treasury bonds. And so one thing the Fed could do to help is stop QT, which means every time the US government pays debt off to the Fed turns right back around and buys another treasury from the open market, with that essentially not being restrictive, not destroying cash from the system, sucking liquidity, but also not adding anything, just keeping it, maintaining it at the same level. Ending QT is something that would already likely be happening at some point this year anyway, but it's possible that Scott Bessent was talking to Powell about potentially trying to end it a little bit earlier. As a result, there would be on net more demand for buying US treasuries, including the 10-year treasury, and all else being equal, more demand to buy these treasuries would push the yield lower. But that's probably not enough by itself. You probably also need something like an operation twist. In other words, the treasuries that the Fed holds on its balance sheet are all across the curve right now. And so the Federal Reserve could focus on shifting the composition. In other words, we'll sell some of these things and we'll buy more of these things in order to try and influence the price and the yields on those bonds across the curve. But
or tariffs too, right? So again, a different force to strong arm the Fed to lower the rates. Again, like it's a balance, right? Of course, like it's going to cause some chaos, and that's again, people are now switching to the U.S. is in a recession or whatever. And the media is notorious for late in the game already. We've been in recession for quite some time, but they don't want to admit it. It depends on who's in the White House, right, and whose side they're on. They're gonna try to, crank that up to, to make certain president looks better than other, or look worse than other. Depends on what they're covering. You've seen a lot of unrest coming about this president, and I know, even. Friends of mine and people that I'm close with also have that thoughts, right? That he's just doing it out of attention seeking and all that stuff. Yeah. But I don't know. Yeah. Remain to be seen. Let's take away from that topic because I can go back to the autumn. Okay, autumn. Are real gold bills that are US backed, support by local currency, and money used in exchange. Okay. I thought it was like a physical gold, but I guess it's you could use it in exchange. I see. But yeah, people are using it in everyday life, right? Still. That's cool. Yeah, I mean, but that's dangerous too. Like, what if you have billions of dollars worth of those bills, right? So, I think that's why people are more conveniently using bills to do whatever the day to day. It's a system that needs to be worked out for sure. But I think that's why, Bitcoin is playing an important role, because technically you could do that digitally. You could a medium of exchange of value. But you need 100 people on the network to, transact in Satoshi. Instead of depends on how high Bitcoin's gonna go one day. So we'll see. But I think XRP is gonna facilitate that for sure. So back then we didn't have the technology to exchange those type of medium without having the physical gold bar exchange hand to hand. So, but that's interesting. The U.S. is in a recession, and drug works in a recession. Oh, okay. The mean GDP or GAP? Not quite sure what that is. All 4 quarters are beats. And Thursdays are earnings using, right? Earnings greater than. I'm thinking about buying that. All right, guys. I think I am pooped out and I need to call this person here. But anyway, so I hope you learned something today. I know it's been, what? Oh my God, 3 hours? Goodness. I think that's a record. But I have a lot of help from videos and stuff, so I have some breaks in between. So don't feel too bad for me. But yeah, so I hope I kind of give you a little bit of calm and ways to at least meditate on what you own, understand what Bitcoin is, understand what Jimmy is trying to achieve, even if they're not going into Bitcoin. Just studying in that, a blockchain environment, even just the blockchain alone, there's so many value to be unlocked. How much value, we don't know. Again, depends on what leadership is going into right now. But Bitcoin is for sure a store of value. It's a good idea. In my opinion, obviously, you have your own. But yeah, I hope I could convince you of that. But anyway, I'll let you guys go. Sorry about this interruption, all that stuff. But yeah, bye.